Three, two, one.
BFIN 255, Section 11, Investing in Stocks. So I started investing when I was about 21 years old, and I kind of got the bug right at that time. I invested in a little mining stock. I think it was trading about 80 cents, something like that, and I sold it for like $1.60 or $1.50, and I made a really nice profit from that. And I thought, wow, is this ever easy? This is great. Here I am. All I have to do is put my money into the market. It works. I didn't have to do any work, and all of a sudden I got more money out at the other end. It was like kind of like magic. Unfortunately, the next trade, it kind of went the other way. I put money in at $1.50 and it went down to zero, and I lost all my money. And I said right at that point, this is not as easy as it looks. This is not as easy as I thought it was. And I had to learn about investing to become efficient at it. So, and become a professional investor over time. So I want to give you the basic elements of what investing is really all about, and what stocks are all about, and what the stock market is all about. So let's take a look at an example here. So here's Bill's Lemonade Stand, and that's my company. I just started that company, and I issued myself 100 shares at $1. And what am I going to do with that $100 that that seed capital? What am I going to do with that? Well, I might buy inventory, I might buy equipment, I might have to pay somebody to help me to run the lemonade, to actually sell the lemonade. So that's the initial seed capital to get that business up and running. And I hope that over time, Bill's Lemonade sells a lot of lemonade. We have a great location, we got a great story, we have great products, we have great mix of product. And over time, I can charge more for my lemonade. And the value of my company, based on the growth of the company and the cash flow of the company, hopefully will increase in value from $1 a share to $2 a share. And now the value of my business is $200, up from the $100. So I've doubled my money just by increasing the value of the business. So maybe in time, somebody comes along and looks at Bill's Lemonade and says, hey, you know what, that's a really good business. I like the business model. I think I'm going to buy that. And they come along and they would buy that business for $200. This is an example, a classic example of what's called a private company sale. So private company seeded it with sort of early contributions from the founders. We issued ourselves what's called Class A common stock, which allows you the ability to vote if you're a shareholder in the company. But ultimately, and it also allows you the ability to sort of structure the board. Who's going to be on the board? Who's going to manage and control the business? So that Class A common stock is very important. And that's the typical stock that gets issued when you do a startup business. So, and over time, if the business grows, as I said, maybe a private buyer, another private buyer comes in and buys all those shares from me. And then if there's enough value, then maybe I retire. So that's a private company. Private investing, Class A common stock. Now, if this business is a real good business, I might decide to take this business and go from being private to becoming a public company. And so what a public company is a company that trades on the stock exchange. It's basically a big auction mart where investors from all over the globe can come in and bid, give you a price bid on your stock, like what they think your stock is worth. So in Canada, the primary market for the public auction is the TSX. And again, it's an auction market, and anybody can bid. Anybody can open an account if you're legally able, like if you're over 18 years old, and you're legally able to do so. And you can bid on Bill's Lemonade stock. You can come in and you say, hey, you know what, Bill, I'm gonna give you $2 for that share. Or I'm going to give you $3 for the share. Or if you're like my friend Harry, he's going to give me $4 a share for that stock that I started out with was $1. I valued it at $1. Now I'm getting $4 a share. So 400%, 4 times the return on my money. And that's really how the public auction works. And that value is based on the perception of the value, the growth proposition, the cash flow of the business, the management teams, but it's the market that will set the price, either up or down. And so we work by trading in the markets, and that's how stocks basically trade. It's a live auction mart, and it's an exciting place to be when things are going your way and the price is going up. It's a tough place to be when the prices are going down. And so we use a combination of different things to what we call fundamental analysis. Cash flow, earnings is a key sort of contributor, and assets to sort of set the price, set the value for the stock. And so that's the basics of investing. So hope you enjoyed the video. And next unit we'll get into talking about dividends. Thank you.